Reserve. Inflation has been so high, less money in their savings accounts, less money in their investing accounts. What's up, guys? Welcome to another video. I'm going to talk about the collapse of First Republic Bank. It's the second biggest in recent U.S. history, and hopefully by the end of this video you'll know everything that's going on and also know what to do with your money as well. So if you guys remember, Silicon Valley Bank collapsed not too long ago, about 2 months ago, and at the time that was the second biggest bank since 2000 that had collapsed in the US. Now it's actually surpassed by First Republic Bank because the assets of First Republic Bank was a little bit bigger than that of Silicon Valley Bank. The reason I'm kind of messing this up is because there's a lot of banks that have collapsed. Actually, 3 out of the 4 largest bank collapses the past 25 years in the US has actually happened within the past 2 months. So that is Signature Bank, Silicon Valley Bank, and now First Republic Bank. What's happening? Oh, lame. So yeah, I mean, Washington Mutual collapsed during the financial crisis of, I forget exactly the year it collapsed, probably 2008. Don't quote me on that one though. Also, flame me in the comments if that's wrong. Also, hit the like button, subscribe to my channel. Anyways, Washington Mutual collapsed about 15 years ago, but the 3 other big ones happened very recently. So, Signature Bank with $110 billion dollars of assets collapsed in March, and so did Silicon Valley Bank. Oh, I'm trying to go up the stairs. Oh, Silicon Valley Bank had about $209 billion worth of assets, and now First Republic Bank with $229 billion dollars worth of assets. So that's pretty significant. There's 3 of these gigantic banks that have just collapsed. It's interesting because they're all collapsing due to very similar circumstances. So it's honestly, there's a lot of people that were kind of predicting that First Republic Bank was going to be the next one out. You know, a couple months ago when all this was going down with Silicon Valley Bank, just based off of how they were financed, what they had all their money in was extremely similar to Silicon Valley Bank, and there was a tendency of a bank run on First Republic Bank at the time, but it somehow survived, and I think there was also about $30 billion that was put into First Republic Bank in kind of a attempt to save it. So this was put in by other banks that wanted to keep it alive, and yeah, that didn't help. I mean, it kind of helped for, you know, a couple days or a couple weeks, but long run we can see that it didn't really help. So it's interesting because, you know, it's actually extremely similar to Silicon Valley Bank, and I guess time will tell if there's more banks that are in a similar situation. But it all keeps boiling down to the interest rates that were raised super fast, because First Republic Bank actually had a lot of money on hand, a lot of cash flow a couple years ago, and then decided to go really hard into different types of bonds and securities that at the time looked very good investments, but then it turned out that they weren't. Basically because of basically, let's see, a lot of smoking. Oh no. So yeah, the reason why those investments weren't that good is because when the interest rates came up super fast, those investments were pretty much worthless. Especially if they had to be sold right away, which is what happened, you know, because of a lot of people were taking their money out of the bank, and then once people realized, like, oh, like, you know, Silicon Valley Bank and I guess now First Republic Bank, like their values or like unrealized assets were down so much, then it just snowballs from there, and then everyone starts pulling their money out, and it just gets so much worse. So yeah, I'm curious to see what will happen next in the banking industry, but because they want to keep telling you that, you know, everything's fine and it's not that bad and all this stuff, but banks keep collapsing. So so obviously it's not as good as they want you to think. I do think that there's a lot of banks that are going to be pretty safe through all this, though. Just because they're... What in the world? Why is he so fast? That was crazy. So yeah, there's a lot of banks that are really, really big. I mean, for instance, JP Morgan is gigantic. And so what happened to First Republic Bank when they went bankrupt... Let's see. Okay. So First Republic Bank got then just kind of stopped by the federal government, came in and just shut it down, and took over. And then JP Morgan just reached out and was like, hey, or I guess it's not it's a bank, it's not a single person, but JP Morgan reached out and said that they would buy a lot of the assets that that First Republic Bank had, and you know, the reason is probably because they think it's worth it. You know, I mean, they had, I think there's somewhere around $92 billion in deposits that were in the bank that JP Morgan has now taken over, and then I forget exactly the numbers, but it's a ridiculous amount that is in different bonds and securities, and I guess JP Morgan just figured out that, yeah, we have enough money to take over all this. So once again, the depositors are fine. And actually, well, I guess, so a difference between this collapse and the Silicon Valley Bank collapse is that, to me, it seems like regardless of how big your deposit was in First Republic Bank, you'll get all of it back because JP Morgan is just taking it over. Whereas if you had, say, $10 million in Silicon Valley Bank, and you were a tech startup or whatever, you would lose almost all of it because you would only be able to keep what is FDIC insured, so $250,000. But in this case, you're actually able to keep all of your money, so it's a pretty good deal for, you know, the depositors, the people that actually have money in the bank. Whereas if you're a shareholder of First Republic Bank, those shares are now worth absolutely zero. So that's rough. This is kind of what, you know, people did foresee this. That you know, as a depositor, as long as you don't have, I mean, most depositor is going to be fine, right? Because it's FDIC insured. Oh, that was interesting. But yeah, if you're a shareholder and you're kind of betting on some of these banks, then that's pretty risky. Obviously, if you go for some of the bigger banks, it'll probably be fine. Hopefully. So, but yeah, the banking crisis is definitely not over. It's going to keep going for a little bit. Looks like the worst is past us, but we'll see. So, if you like this video, subscribe to my channel, and I'll try to stay on top of more of this type of news stuff. Yeah, thanks for watching.